Hi guys, I'm James and this is the second edition of the Bag Hodler. Well, today, as always, I'm taking a closer look at the technical picture surrounding the price of Bitcoin. After all, most of my bags are heavily laden with the king of crypto, so that's what I'm primarily interested in. And as you can well see, this picture has remained largely intact since my last video. As a matter of fact, since then, the pattern that I drew up then has remained largely valid, and the price has remained stuck between these two defining trend lines of a descending triangle pattern, which many consider to be a bearish one. Now then, the price getting squeezed tighter and tighter within this range is sort of acting like a spring. The tighter this range gets, and the longer the pattern holds, the more violent the eventual upward or downward break shall be. Now it's obvious that right now the price is in search of a catalyst, and if nothing else pops up, this catalyst will likely be Bakkt's launch on September 23. Will this price breakout presumably triggered by Bakkt's launch, happen upwards or downwards though? As far as the short run is concerned, it's well worth zooming in a little bit, taking a look at this candlestick right here, the one generated on Friday, September 13, which is an inside candlestick, and which has therefore defined two key levels for us, one of support and one of resistance. The support level is at the $10,154 mark, which was the low of that day, while the resistance level is at $10,458 right over here, which is at the high of that same day. Now then, if the price happens to break below the low of $10,158, $154, it will likely drop down to around 9,855, which is the low of September 11, and which therefore defines a sort of short-term support level for us. If the price, however, moves the other way and it breaks above $10,458, then it will probably go up all the way to 10,900 as the first leg of its journey and then move up further. All signs really seem to point to the fact that the breakout triggered by Bakkt or by whatever else will happen upwards. First off, as I pointed out last time, we have the statistical probability associated with this sort of descending triangle pattern, which in an overall uptrend means that there's a 63% chance of the price breaking out upwards. Then we already have a breakout on the 4-hour chart. Let us switch over to the 4-hour chart and take a look at the price. Here we go. We can define a sort of downward channel right over here. And as you can see, well, this isn't going to be particularly precise, but as you can see, we have already managed to break out of this channel right over here. Now, switching back to the 1-day time frame, that clearly shows us that just a second there. Clearly shows us that price breakout that I just mentioned happened somewhere around this point right here on September 12th. So we have that upward breakout already, and in addition to it, we have the statistical probability that I just mentioned as well. Then we have a strong fundamental indicator that has in effect exploded over the last few weeks, which is the Bitcoin mining hash rate. Now, this is the graph that showcases the hash rate's evolution over the last 2 years. And as it's obvious, we have recently hit an all-time high at around 98.5 million exahash. Well, that is quite impressive, and what exactly does it mean, however? And why did it happen? Well, apparently, some 500,000 brand new 55 terahash ASICs went online recently, driving the hash rate up to these incredible heights. And that is definitely good for Bitcoin overall because, on one hand, it secures the network. On the other hand, it proves that miners not only trust the network and the whole system, but they're bullish in regards to the price. Obviously, there were several factors other than just these new ASICs going online, such as the better Bitcoin prices above $10,000, which have made mining much more profitable overall. The newer ASICs may also mean cheaper hash cost, although you have to keep in mind that these machines come with a higher power consumption, and therefore the fact whether they can lower or not the hash cost is highly debatable. Some people have also mentioned or brought the Chinese floods into the picture, which have apparently resulted in cheaper electricity in the country, allowing miners over there to power up more machines and remain profitable. But this argument seems a bit like it's grasping at straws. It's possible, but not very likely, especially not in light of the fact that, according to some sources, this flooding has apparently actually disrupted hydropower and thus negatively impacted Bitcoin mining. Apparently, there was at least one mining farm in China that got washed away by the floods, and some $140,000 worth of equipment was lost as a result of that incident. What is most likely, however, is the fact that miners have gotten overwhelmed with the halving hype and the resulting greed. Miners are obviously looking to cash in on the last 12.5 BTC block rewards. They may also anticipate the price of the asset skyrocketing following the halving, possibly more quickly than it did after previous halving events. But the fact that the hash rate has gone up this quickly and it's now at these mind-numbing heights also means that the event itself is likely to occur a little sooner than anticipated. Some people are already pointing at April instead of May in this regard. Well, guys, that's it for today. Like my video if you like it. Hit the subscribe button and ring that bell button if it's still there. And remember, I'm always around here and you can get your daily dose of hopium right here